Thank you for staying tuned. Now, in many ways, the Nigerian economic outlook for 2019 is said to be dependent on the outcome of the general elections and the likely impact it would have on the overall economy and financial markets. In its annual economic and financial market outlook 2019, Afrinvest West Africa Limited observed that the widespread economic challenges that induced a recession in 2016 still persist and would be exposed by any substantial economic pressure. Now, the 70-page report further highlighted that since the 2015 elections, growth has persisted below the long-term growth rate of 6 to 7%. Unemployment rate has more than doubled from 9.9% in the third quarter of 2015 to 23.1% in third quarter of 2018, and insecurity has spread across all regions of the country. Consequently, Afrinvest views the country as being on the precipice because this point in history will determine the next cycle and could very well lock the country into a spiral of weak or contracting growth or lay the foundations upon which new growth levels will be built. And joining me now to dissect this report is the Group Managing Director of Afrinvest West Africa, Mr. Ike Chioke. Good morning, Mr. Chioke. Thank you very much for joining on the show.
Thank you for having me.
Before we dwell into this report by you, the inflation numbers just came out. Were you disappointed when you saw that number? 11.44%. Still going higher.
I was quite surprised. I think the impact of the insecurity, particularly in our farming regions, has now begun to creep into food inflation.
And that's exactly what is even driving the index.
You see that's the highest increase amongst all the components, sub-components of inflation. So that's to be expected. And obviously, because of the political cycle, there's more money being thrown into the system. And as much as the CBN may try to mop up through their OMO actions, with politicians are busy, spending money, and that also can contribute itself, to the inflation effect.
All right, thank you. All right, looking at this report, you titled it "On the Precipice."
Yes.
Quite an interesting title there, meaning a very steep cliff.
Yes.
What informed that title?
I think we see the economy to be on the edge, so on the precipice, and any small push. Any small thing could actually push off the cliff. And I think because in this environment with all the political noise, we're not really focusing enough on the real thing that impacts Nigerians, which is the economy. And you still find the economy is challenged by all the issues that we identified in 2016 as a result of the recession. There's widespread insecurity, as I mentioned. The same insecurity is affecting most of our farming regions. The growth you see in the system is still anemic. Remember our sort of previous run rate growth was about 6 to 7%. We are climbing out of the recession of 2016. We expect that we may end 2018 at 1.9%. Again, while that is positive, it's still way below our population growth of 3%. So that means every year Nigerians are poorer on the average.
Wow. Yeah, it is interesting that you said that elections offer opportunity, for Nigerians to press the reset button, as you put it, and then, of course, put the country back on track. The presidential election is only just few weeks, away. What are your expectations?
Well, we're thinking of the elections from two scenarios. The first scenario is that there's a free and fair election and everybody reasonably expects that this is what has happened and the incumbent wins. In that scenario, we'd expect that things will continue as normal. And, of course, the economic system we have today isn't quite doing enough for most Nigerians. It's too much money going to recurrent and not enough really trickling down into the real sector. And there's no material reform in the economy, despite what has been said in the economic recovery and growth plans. But the second scenario is where the elections turn out to be not acceptable to most Nigerians and is regarded as not free and fair, and which may then trigger additional insecurity. I mean, we have already massive insecurity in the country. Imagine triggering widespread additional insecurity as a consequence of the election. Now, that would have a huge knock-on effect on investment climate. We think that even the last remaining investors who have been resilient will run, And of course, this will dampen the economy further and lead to us, finding ourselves in a difficult position. In that scenario, we think we may fall off the cliff. Hence, the title On the Precipice.
Well, it's left for the politicians
Yes.
or those in charge of the economy to really know whether they want the economy to fall off the cliff or perhaps do better.
It's the politicians that are going to create the problem. So if we're able to run through a free and fair election, of course, today we think it's a two-horse race between the incumbent party, APC, and the PDP. But yeah, the election could throw up some surprises. Because of the widespread insecurity, most Nigerians in the rural areas have been affected. Usually you would think that most Nigerians in rural areas can live their life without Abuja and Lagos because they can, stay in a farm, grow, cultivate their crops, and feed their family, put their kids through school. But with insecurity and people being moved off their land, they're finding themselves being refugees in their own country. These people will have to have a voice, and I think that can create, different results than most people are expecting. But I think that the incumbent, clearly, with the advantage of incumbency, has the upper hand so far. But we don't know what the election results will throw up.
Sure. Now, in the past year, we've seen a lot of concerns coming from the global growth, which is expected to slow down. What do you expect in 2019, and what factors are likely to drive this global growth?
In the case of global growth, we will expect 2018 to end at just 3.7%, and 2019 to be flat at 3.7%. There are a number of factors that are constraining global growth today, not least of which is obviously the new protectionism that Trump introduced once he said America first and say, I'm focusing on my own country. Then, of course, other major economies are doing the same thing. But that was exacerbated with the U.S.-China trade tensions. That has multiplier effect. And, of course, with the systemic central banks in the developed markets normalizing their interest rates, you've had the effect that, investment capital flows are leaving developing markets and going back to the developed economies. And that also has its own negative implications for growth. So we expect that this year growth will be flat at 3.7%, although it's recovered from the 3.3% it was back in 2016. But we don't see much excitement so far for global growth.
I'm still talking about the global economy. Oil, that is where the oil price, coming here. Since October 2018 rally, when oil price, peaked at $86 per barrel, we have seen a reduction in prices. Right now is, I think, slightly above $60,
Yes.
Per barrel. So what is the outlook on this, and how would you even tie it to all the other global economic issues that you have mentioned?
Yeah, we see global demand for oil at 101.5 million barrels per day. It's actually declining, coming off from 2 million barrels. The overall production has increased by 400,000 barrels coming from non-OPEC producers, and this, the U.S. is actually the biggest culprit. Non-OPEC is contributing mostly 2.5 million barrels per day increment, while the OPEC group is actually seeing a decline to 37 million barrels per day from 38 million barrels per day. But when you then put that against the overall tepid demand, which is actually weaker this year than last year, we'd expect that oil prices for 2019 will remain around $60 rather than the $71 average of 2018. So that has implications for Nigeria's economy because obviously our main income is from sale of crude and associated gas. So this year we are forecasting that it will be around $60 per barrel through the year.
Okay, aside from the implications or the developments in the oil market has on Nigerian economy, you talked about the issue of protectionism. We talked about the China-US trade tensions and all of that. How do you relate that to Nigeria? What are the possible implications? What possible implications do you see would come out in that for Nigeria? And what do you think the government can actually do to really watch that?
Well, I think, for us, when you think about, taking it from a picture of the global and then coming into Nigeria and then thinking of our perspective in terms of what the election outcome can bring, We are looking at three scenarios. One, there's a base case scenario in which case the elections are free and fair, the incumbent returns, and policies continue. Although they are not really sort of policies that would say that are exciting at the moment. There's nothing major being reformed in the economy to sort of pull in capital against the tide of capital leaving Nigeria and leaving other similar developing markets. So in that scenario, we think that economic growth in Nigeria will be about 2.5% 2019. It will be an uptick from 2018, where we're looking to end the year at 1.9% GDP growth. Now, in our pessimistic case scenario, and this is a situation where, like I explained earlier, the elections are judged not to be free and fair, and there's widespread, instability and insecurity in the country, we then see that the GDP growth would decline from last year. Last year was 1.9. We may see it coming at 1% by the end of the year because, agriculture will be severely impacted, services will be impacted. In our optimistic scenario, in that case, regardless of who wins, we see a new government coming in which is willing to introduce the much needed reforms we've talked about. We've talked about power sector reform, oil and gas sector reform. There's so many things that we can do better in this country with our own capacity. We then see that such a new government, whether it's the incumbent or any other party, that could stimulate growth in 2019 to above the 2.5. We're looking towards 3, maybe 2.93% by the end of the year. And indeed, if those reforms are implemented, you could see that getting to a historical trend rate of about 6 to 7%.
You have painted three scenarios here,
yes. Mm-hmm.
Three base cases: pessimistic, optimistic. Looking at these scenarios that you have painted, which do you think really suffices? Which do you think is playing up, is rearing its head now, considering the factors that are coming up, the election and all the government policies coming up, and looking at your projection into the year?
At the moment, I think we would adjudge that we are more at the base case level, although there are signals that we may be drifting towards a pessimistic case. I mean, the incumbent government has, often tends to trip up on its own feet and creates tensions in the system. And I think that there could be they could do more to manage sort of the political environment and, sort of communicate to Nigerians.
When you talk about doing more, what do you expect really from them? What exactly do you expect from them?
The last week most of this week we're talking about the CJN. That crisis could have been better managed, and I think that from what I've seen from most of the legal luminaries that have discussed it, there's a better process on how you may decide on whether the CJN was guilty of any crime than what had been presented through the Code of Conduct Tribunal, which has now been put aside. But again, it's one of those things that are stoking problems. And this is happening at the same time where there are 20, 25 people killed in Sokoto State. I'm sure most people missed it, coming from the challenges you're seeing in Zamfara, where maybe another 15 people died over the weekend. And so there's been so much gory issues happening that we've now sort of gotten used to, which is abnormal. And I think that more effort needs to be done to cool down the political environment, do more in the security architecture of the country. We seem to be losing ground even to Boko Haram on the northeast and some terrorists on the northwest. Who knows what's happening on the south side end? So these are issues that
Mr. Chioke, for sticking on the show.
Thank you.
Well, just before we went on break, you were talking us through your optimistic case for the economy in the light of 2019 general elections.
In our optimistic case scenario, now that would be really when all the issues are in alignment. I would think that there will be a smooth and a free and fair election. This transition is smooth, and the new government comes in. Whoever, whether the incumbent or another party, they come in with energy and the political will to introduce the much-needed reforms in the economy. If you recall last October when we released our 2018 Nigerian banking sector report, we titled that An Economic Agenda for a New Government. And in that report, we identified 7 key aspects of the economy that, if reformed, could really move this economy, not even the 6 to 7 growth, but something like 10 to 12 growth, which is really what Nigeria needs.
It will be interesting if you would
Yeah.
remind us of those 7 agenda
Yes.
you did mention.
I will break them up. There are 3 hard areas, and then there are sort of 4 soft areas. On the hard areas, you will look at oil and gas sector reform. You want to look at power sector reform. You have massive issues of, tariff imbalances, and then you can look at transport infrastructure. But on the soft areas, which are to do with human beings and how we organize ourselves, you need to think about human capital development. You need to think about looking at our security architecture again, because I think today the security apparatus is challenged. As you can see, all the issues that are cropping up around the country. You may think of what we can do to boost competitiveness within the country, all the paperwork, all the bureaucracy that businesses have to go through to increase productivity. And then last but not the least is how to build effective institutions across the system, both at the federal, at the state, and the local government.
Okay. Now, assuming we are running with your base scenario, what will be your expectation for exchange rate, inflation, and interest rates?
We're running with our base scenario, and we'll probably hold it stable for the first half of the year. We'll think that with external reserves today at $43 billion, there's enough capacity at the CBN to keep everything normal and unchanged.
That's for the exchange rate, right?
Yes, so the exchange rate will remain official at 305 Naira to the dollar. At the I&E window, it will remain about the same band of 360 to $365 to the barrel. Naira to the dollar, excuse me. Now, if you look at it from an interest rate point of view, we'd expect that MPR will remain stable. They won't try to, shift things around. Obviously, they're still fighting the normalization of systemic central banks normalizing their interest rate environment. So they would like to keep some attractiveness of foreign investors in an environment where, obviously, all that trade protectionism we talked about is also pulling cash out of developing markets. From an inflation point of view, however, if you notice that we started this program with the new inflation outlook, we will see that inflation could sort of begin to trend back up, and that is linked to some of our local factor issues. It's not imported inflation from exchange rate movement; it's more the lack of internal capacity in managing food price inflation, and the difficulty in delivering services in areas where there's insecurity, and so that increases costs for everyone.
Now, with the inflation number we have seen now, and you just mentioned, given the outlook, it's going to be trending up. The Central Bank and its Monetary Policy Committee will be meeting next week.
Yes.
Now, do you think they may probably consider even raising the rates, considering the way things are going, and then the election coming up?
Yes, but I think that, there are a number of other factors. Politically, it wouldn't work well.
If they do
the rates, and they have to mind the politics. And then also the sort of the tenure issue. The CBN governor's first term of office comes to a close at end of May. So he may decide to just keep everything stable and then transition. And now, obviously, if he comes for a second term, then he can begin to tweak around, with some of those monetary policy issues. But I don't think that they will do anything different from what they've done in the past several meetings, which is keep everything as is.
All right, let's look at the 2019 budget,
Yeah.
8.8 trillion naira.
Yeah.
The issue has always been implementation. What do
Yes.
you see there?
And that budget is interesting. It's 8.8 trillion. If you remember, last year the budget was 9.1 trillion. In 2018, and in the year before that, in 2017, the budget was 7.3 trillion.
And what does that tell you? From 9.1 trillion to 8.8 trillion, what does that tell you?
It tells you that they have been getting a bit more sober, because there's a budget, and people forget that there's actually the actual. If I look back the last 2 years at the actual performance of the budget, the government has ended the year at about 6.5 trillion in each of 2017 and 2018. Even though they had budgeted higher numbers. So this year in 2019, even though they've come out with 8.8 trillion, I dare say that in an environment where there's going to be a lower oil price environment globally, like explained earlier, we may see average oil prices at $60 per barrel rather than $71 last year. So their revenue component, which is budgeted at 3.7 trillion naira for oil revenue, is going to be challenged. Last year, even with a higher oil price environment, they are likely to end the year at about 2 trillion naira of oil revenue. So from the constraints already globally as well as domestically, that 8.8 trillion will struggle to exceed the run rate of 6.5 trillion, which is what they've done in 2017 and 2018. So that has an impact. So things like, okay, how much we're going to, put into capital expenditure versus recurrent expenditure will suffer. Clearly, even today as we stand, the government spends more on recurrent expenditure than on its total actual revenues. So when we go back historically and look at revenues earned, not budgeted, the actual revenues earned are below the recurrent expenditure of the government. So by the time the government is now going to do any capital expenditure, they actually have to go and borrow money. And that has now created this very perversive situation
of
where
incurring debt.
And now your debt service to revenue is averaging about 60%. Now, debt service to revenue means that if you're paying interest, assuming your income is 100,000 naira a month, the amount of interest you're paying every month to service that, your lifestyle, is about 60,000 naira. Yeah. Clearly, that is not sustainable. And so that's why whenever we look at the economy, we say we have to come back to the drawing board and look at those areas for reform.
Talking about debt, we've heard the International Monetary Fund warn countries, including Nigeria, about their increase in debt. But the government does not seem to agree with that we're really indebted, highly indebted.
Yeah, we are. If you look at it from sort of a debt to GDP point of view, it looks modest, about 19-20%. But it's debt service to revenue that's the issue. And obviously, one could say there's a lot of work they're doing in increasing revenue, like, the VAT system, tax revenue is going to be helpful. Yeah. More can be done. But I think you have to think of the Nigerian economy as an area where you need more private sector participation, more companies making profitable earnings who can contribute to the tax bracket. And actually also their capacity to attract more investment flows into this country on a long-term basis. And I mean, foreign direct investment, not foreign portfolio investment, because that's what we're seeing with all this, tweaking with the MPR and the exchange rate is really foreign portfolio investment.
You talked about VAT. Has VAT really worked in terms of generating revenue?
Well, VAT has worked in terms of widening the people in the tax bracket. And, when you add VAT and add other issues such as the BVN structure, government definitely has more information about where the money is moving, who has money, and they can investigate. Now, rather than use that information in sort of a negative manner, I see that it tends to be that EFCC is going to shake down one politician or the other about where their sources of income is coming from. I think the focus should be on using that information from a tax angle and saying, well, we may not know where the money is coming from, but you should be paying appropriate taxes for this amount of cash in your either your corporate or personal accounts.
Are there other ways you think government can actually look into to boost its revenue?
Yes, I think it is just really like going back to those areas of reform I talked about. Because if you don't do the reforms, you end up for government servicing and paying for things that they really shouldn't be doing. Today, power is a major constraint on major businesses. If you can reform that sector effectively, and then it goes away from what many companies have to budget for, then clearly that can help. And that's really the angle that I think that they have struggled to be able to achieve within this government.
Okay, just before I let you go, we have seen the Nigerian stock market lose about 17.8%. That was last year, down from 42.3% in 2017. So what is your outlook now going into 2019?
Again, our outlook is predicated on three scenarios. Our base case, our pessimistic case, and our optimistic case. In our base case scenario, we're expecting a smooth and fair, a free and fair election, a smooth transition, the incumbent returns, there's not much change, but obviously some of the losses from last year can be recovered because investors are coming knowing that the environment is stable enough. And we'll see that we can recover some of the losses from last year. And we're looking then in our base case at about 44% market upside.
Okay.
Because you have a post-election, bump, and then the rest will be running on the sort of what we consider to be bellwether stocks, consumer goods, banking, which ride on the population growth, which Nigeria clearly has.
All right.
In our pessimistic case, however, it will be down 17%. In our optimistic case, we are seeing that the market will really jump, above 100% jump, because the economic reforms would ginger the market, if you to borrow a local pun.
Sure. Yeah. Anyway, thank you very much for your time, Ike Chioke.
It's a pleasure. Thank you very much indeed.
You're welcome. Well, Mr. Ike Chioke is the Group Managing Director of Afrinvest West Africa.